Good day, YouTube. My name is Colin. Thanks for tuning in to another installment of Financial Success. In today's video, we're going to go over how you can set up a perfectly balanced portfolio with just 4 ETFs. Okay, so ETFs. For those of you who don't know, they're essentially very similar to index funds, but they trade on the stock exchange and you can get in and out of them. Buy and sell them just like a stock. So if you know how to buy a stock, you can buy an ETF. That's the short of it. If you want more of an explanation, put a comment below and maybe I'll even make a video where I go into a little bit more depth and more details of the differences. But ETFs, I like to use them just because they're easy to buy, easy to sell, and they're a great way for you to just go ahead and set up your own portfolio. Because one of the things I want to accomplish with this channel is I want to show people that it's very easy for a layperson or anybody to just go in and set up a great portfolio without going to the bank and blowing a bunch of money on fees and losing a bunch of your gains to different people in the financial industry. I'd rather have you set up your own fund. And I know I made a video before about kind of the industry and about some of the ways in my opinion, I feel like they take advantage of people. And I think if you just go ahead and learn a few basic things that I'm going to teach you, a lot of it is I'm going to teach you on this video, but if you just learn a few basic concepts, you can be much better off. And it's really not that hard, okay? It's actually very simple as soon as you understand a few things. Now, got that out of the way. ETFs. So the first ETF I'm going to recommend that you get in, and I'm going to put it out there as about half your portfolio, okay? So 50% is going to be in an S&P 500 ETF. All right, I'm gonna put it out there as SCHB. I happen to like this fund because it's got very low fees, but there are a lot of other ones that are not really a whole lot different. They're all gonna be relatively low fees. Another good one is SPY. Vanguard also has some funds. So any one of these will be fine. Go ahead and check them out. Otherwise, I'll just go ahead and recommend SCHB because I think their fees are the lowest you can possibly find. And they're buying essentially the same thing no matter which ETF you buy, you're getting the same representation of the same S&P 500. So what the S&P 500 is it's going to track the success of the 500 biggest companies in the US stock exchange. Big companies, blue chip stocks as they call them. Your Apples, your Exxon Mobils, your Coca-Cola, all that kind of stuff. So all the big stocks, if they do well, you do well. This is a historically very successful fund, and that's why you're going to put a big chunk of your money in this because it's safe, it's reliable, and it's been almost foolproof to long-term investors. Now, so we got good exposure to big stocks. Now, the next thing we want to do is balance this out with some smaller stocks. So I'm going to go ahead and recommend you put about a quarter into another ETF, and that ETF is going to be VBR. This is a Vanguard fund, and this is going to get you exposure to some smaller stocks in the US economy. And the reason I recommend VBR, again, is it's because it's one of the ones with the lowest fees. Some other ones you can take a look at if you're also interested would be IWN or IJS. That would be the iShares Russell 200 Index Fund. Now, all of these essentially track the same thing. Those other two I mentioned actually get some even smaller stocks, but it's roughly the same. And this is going to get you exposure to smaller companies. So you're not just on big companies, you got some small companies as well to balance that out, okay? All right, so if you're keeping up, we got 50% of your money in SCHF, which is going to track the S&P 500, the big blue chip stocks. You got 25% in VBR, which is going to track the smaller stocks. Both of these are going to be tracking the US stock exchange. So that's why the next on my list, I'm going to have you get some stocks in foreign stock exchanges, okay? How I'm going to have you accomplish that is I'm going to have you look at an index fund called SCHF. All right, this is going to track stocks in Canada and Asia and Europe, those types of places, okay? This fund's going to have low fees just like the other ones. There are a couple others. The one thing that I'll just put out there that you might want to be aware of with this fund is it does not track emerging markets. So it's not going to get you exposure to more developing countries like Taiwan, China, India, those kind of markets. If you want to get some exposure to that, instead of putting 15% in this one fund, you could split, say 7% in this fund and then another 8% in either VWO or VNQ. But I don't necessarily think that's necessary. You're still going to get a good global exposure. And I just love the European Stock Exchange right now. I feel like there's so much growth there and their economy is coming back strong. And it's a good place to have money right now. Okay, so now we got our 50% in SCHF, we got our 25% in VBR, and we got our 15% in foreign funds under the ETF SCHF. So that leaves 10% left. And this last 10%, I'm going to put out in something that I really believe in. You don't have to put it in this. You could raise your allocation in any of those other three and skip this one. I like to put it out there because I believe in this type of investment, and that is in REITs. If you aren't familiar with what REITs are, it's essentially you invest in these companies that are in the real estate business, either in renting out properties to businesses, to residential properties, business properties, all that type of stuff. And it's kind of a special type of investment because these companies, if they follow a certain protocol, they get great tax incentives. One of those is that they have to pay out 90% of everything they take in to the investors. And the idea behind this is that anybody can get involved in investing in real estate through REITs. Not everybody can just go buy a house and rent it out to tenants. Okay, there's a lot of barriers to entry into getting investing into real estate. So that's the idea behind why legislation was passed to enable REITs. And it's a great way for you to just put a little bit of money. You can buy it real easy just on the stock exchange for your 401k, your Roth IRA, your individual investment fund, whatever you want to do. You just buy up these REITs and you can collect 90% of the money that they take in. And so you're going to get great dividends, which if you know me and you watch my channel, you know I'm a big proponent of investing in things that pay dividends. And the ticker symbol that I'm going to recommend is VNQ. That is a Vanguard fund, and it's based in REITs. So also, I'll put this out there. If you want more information on REITs and you want me to do a video on REITs, just let me know in the comment. If I have some interest in that, that could be another video that I could make. But for now, we'll just go ahead and leave you with that little explanation of what they are. So there you go. There's all four of them. Let's recap quick. We got 50% in SCHF. We got 25% in the smaller cap funds, VBR. And we got 15% in foreign investments. And our last 10% is going to be in REITs. Hope you enjoyed this video. Hope it was educational. This is just a great way that you can get a broad deal of exposure by buying just 4 ETFs. Real simple, yet very diversified. And I think this is really going to set you up for success. This would be a great way to set up like a retirement fund. Say if you want to do a Roth IRA or a 401k, and it's not going to require you to do a whole lot of digging and a whole lot of research. This is a great way for a layperson who doesn't want to spend a ton of time researching and buying individual stocks. This is a great way to get yourself a nice, healthy, either investment fund or retirement fund. So go ahead, check these out. So there you have it. That's today's video. If you enjoyed it, if you thought it was informational, if you feel free to click that like button. Also, feel free to hit that subscribe button right up here. I'm going to try to get more videos coming out on a regular basis. So that's today's video. Thank you for watching Financial Success.